Hello and good morning, folks. Welcome back to Almus Market Mornings, where we bring to you the latest in the financial markets. Tariffs are once again back in the front seat, but for different reasons. On Friday, the Supreme Court of the United States struck down tariffs imposed under the IEEPA Act. Now, interestingly, this seems to be a judgment not on a president's ability to impose tariffs, but about tariffs being imposed under a wrongful act. There are five other sections under which tariffs can be imposed, maybe not to the same level and ease as under the IEEPA. This, of course, has been a market mover. President Trump, in after post the judgment, has imposed a 15% base tariffs on all countries, and this essentially has complicated the situation. And let's understand this more. Uh, Good morning, JK. Now that the base tariff is at 15%, what do you think it means? Does India's tariffs go down further to 15% from 18%?
Good morning, Swaraj. Yeah, I think Friday was, I think, a manic Friday. So much of data, and I think almost as even as the market was digesting the GDP number and PC inflation number, the decision from Supreme Court of US came as a jolt. I would say initially market was very positive in the sense there was a rally in the stocks, and then of course even the dollar fell, but then suddenly there was a realization that it's not all straightforward, because while court has struck down the tariff under the particular act, they have not actually struck down the tariff itself. US government can impose tariffs, but following the proper legal procedures and congressional approval, etc., under various provisions. And currently, Trump has put 15% tariff, which was increased from 10%, which was initially announced under Section 122. But this is only for a maximum period of 150 days. And any extension of this will require congressional approval. Now, as far as India is concerned, they have also clarified that India will also have this lower tariff. And only point is that everywhere they have said that the whatever tariff they are imposing will be subject to the trade deal being signed. So there's a lot of gray area as far as this is concerned. Now, as a reaction, Treasury Secretary and other administration officials of the US said they could invoke other legal justifications to retain as many of the tariffs as possible. And these include a provision that permits tariffs on imported goods that threaten US national security, and another that allows retaliatory actions, including tariffs against trading partners, that of the US, which violates the rules of trade. So I think there is a lot of uncertainty going forward where the tariffs will settle. But one thing is clear, that at least the executive authority of the president has been somewhat, curbed or reiterated that it cannot extend beyond a certain level. Now, what is the impact? They will, of course, remain lower than what was in force before the court decision, and there will be in that case, there will be some impact on the fiscal deficit, because the tariffs at the previous levels were supposed to address the fiscal deficit. They will remain, but not to the same extent as earlier. There will also be, uncertainty as to the next move on the trade, whether maybe his actions can go beyond the tariffs as well. There will be redemption pressures from companies who have shelled out higher tariffs, but the administration has said this will take many months or even years. Now, countries like Europe and India have already expressed the need to study the implications of the development on the framework deal that they have already signed with the US. So there is a huge amount of uncertainty going forward, but markets have been relatively calm. No major moves have been seen, at least for now, although dollar has weakened further from the level where it closed on in New York session. And even the stocks have had a mixed performance. US stocks had been positive, but in Asia there is a mixed performance by the markets as well. Now, why the market is also a bit uncertain is that the ongoing Iran-US tension Now there is a high probability, according to reports, that there will be an attack by the US on Iran. The forces have moved closer to the region. Even this is happening even as talks on nuclear deal have been continuing. So that is again another uncertainty which is keeping the markets slightly cautious. The biggest beneficiary has been the precious metals, gold rallying once again above 5150. It was trading below 5000 just a couple of days back, and now once again it's getting safe haven bid as well. Now, another interesting point is that the Indian American litigator who had successfully argued against the tariffs and won the case in the Supreme Court has raised legal questions regarding even the current imposition of 15% global tariff. So we could see a lot of legal hurdles to whatever the tariffs or other trade related decisions that take place. So I think even the US government will somewhat move a bit cautiously in this regard. So we are in a state of uncertainty, but slightly better position than where we were earlier. From that perspective, markets should not have a major hiccup, but the US-Iran tensions will always be at the back of the markets. So just to recap on the data, US GDP came much lower at 1.4% for Q4 compared to 3% that was expected. But a lot of it was as an effect of the government shutdown, which has impacted the government spending, etc. In fact, the private consumption has held up. We had the PC inflation number again that came much higher than expected, and it could cross 3% if you go by the current trend. However, this was pertaining to December, and we have already seen the CPI inflation, the main CPI inflation, soften a bit. So again, there is no straightforward conclusion that the PC is higher. But all in all, if you take at the face of the numbers, the growth has been lower and inflation has been higher. So it's not a good situation for an economy to be in. So I think market is still assessing the direction for the US assets. Currently, at least, there seems to be some bias to sell the dollar. Dollar yen, which had gone to 155.60, is back down at 154. Euro, which was at some point looking to break the 1.17, is now above 1.18 again. So dollar is not really going anywhere. It is still in the range. Probably the positioning in the market is also slightly weighing on the currencies, but medium-term bias on the dollar definitely looks to be on the weaker side. As far as India is concerned, we have seen a rupee tend to weaken last week based on consistent buying by importers, and the relief from the tariff will, of course, see the rupee gain back a bit. And we also saw the PSU banks offering dollars consistently near about 91 levels. That was also a reason why there could be some sort of a long liquidation that we could see today. India will also keep looking at the developments on the trade with the US, and the trade deal talks, which were scheduled to begin this week, have been postponed. So I think there's a lot of study that is going to go into in depth on the impact of the latest developments, including Europe, India, and other countries as well. So we are in, as far as dollar is concerned, we are still in a range scenario. Dollar rupee will probably be between 90.30 and 91. Once again, we'll wait for larger direction, and of course the flows which have been on the positive side for the month may continue. If it does continue, the further weakness in the rupee may be somewhat curbed. Thank you.
Thank you, Jack. And yes, on the tariff side, we have clarified IEEPA, the president, whatever president has imposed under that has been rescinded. But of course, there are other sections through which tariffs can be imposed. On the geopolitical front, very significant. There is a significant buildup of US military assets across the region. And of course, gold has rallied, trading over $5,100 per ounce on that particular update. But otherwise, broadly, US data showed growth slowing and inflation remaining sticky. But we may need a few more data points because it is a bit tainted due to the shutdown. And for rupee, we weekend past there was a weakening bias in the past week, but some relief on tariffs it can help rupee, but the rangy situation broadly continues. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.